Hello guys, so guys, I just want to quickly explain this trade here that we took, but I want to explain something about it that is very important. So let's go to the charts. When we get to the charts, this is what happened, right? Market opened and shot up, straight up, right? So now then the market shot down. That's the part I want to explain, but let me first explain how the market shot up. I believe I've already explained how to check out Wednesday trades anyway. So now let's go to Fibonacci. Remember, this is not a bias tool, this is a confirmation tool, which means you must also do other confirmations. So now on Monday that was the high, on Wednesday before market opened that was the high there. All right, so we took pending orders with a buy stop there, and the market shot up and went up, but it immediately came down again. Okay, so now if you can see, remember on Wednesdays, what we do with the Fibonacci is that we always aim for the 50% there, right? But in this case, the 50% is already above the recent high, which is yesterday's high, right? So what do? We go to the next level below 50. That's gonna be our take profit one, and the one above 50, and the one where 50 is above the high is going to be our take profit two. As you guys can see there, we put our take profit one, take profit two. But most importantly, I want to explain this part. Let me remove the Fibonacci. So now you get a market that shoots up, straight up, right? But in this case, another candle immediately follows down. How do you know? Sorry for that. How do you know how to trade this candle? Because most people, they're just moving up and down with the market. I'm pretty sure there are people who went up, came down, and now they're going up with it, and at the end of the day they'll just end up losing their money. But in this case, let me explain to you guys to see this fake moves. No, the one that goes down, it's a fake move because what happens, we know the Wednesday direction, it was supposed to go up, right? Using all the confirmations, it was supposed to go up, fine. Then we immediately see a move that goes down. What do? You first go to all the other markets and go see if this move is either a retest or it's a move that's based on fundamentals. And by fundamentals, I mean fundamentals that are not scheduled, right? For instance, let me do this. Okay, something. Let me do that. Yes. Sorry for this. I should have had this tab open a long time ago. But anyway, now if you come check here, what happened? There were no fundamentals, right? So there were no fundamentals, meaning that there's nothing that is economic that's happening which can affect the market to shoot down that much. Now if you go back, like I said, you confirm it by using other things like other markets. So now you go to look at the French market. It went up, shot down immediately, just like the other one, the German 30. Go to UK market, same story. You go to the US market, same story. You go to the Nasdaq 100 market, same story. Why? Remember, the best confirmation is checking which session is in play, right? We all know it's the London session now, but what happened? Even the US market started moving as if it's their session, which means this move here, right, it is not the real move. It is a move that is caused by some unscheduled fundamental happening somewhere that we are just not aware of. We could have caught using economic calendars. That's why it's important to keep up with all news. But in any case, that initial candle already told us the direction of the day, right? Direction of the day. So now if this was a retest, right, if say this candle, the one that came down, was a retest, or even worse, you would see it, right? You remember, that's the high that the opening candle would have broke. You'd see it come somewhere here, even if it goes down a little bit, but probably close above that line somewhere there and continue going up. Then that would have been a retest. But in this case, it shot down, and the following one still continue shooting down, right? So now, even if it's retest or no retest, if you want to if you want to still continue with the trend of the day, the best way is always going to be, even if the market shut down, even if it was a retest, the best way is always going to be to enter at the best move will always be to enter in the middle of both the lines, right? The one that shot up and the one that shot down, right? So now where's the sorry for that. So now where's the place for you to enter this? Like I said, the middle. If you don't want to use a Fibonacci, you can just pull out a rectangle shape there. So yeah, let me check it out. No, what is that? No, that's nonsense. Yes, so just pull up a 50 thing, rectangle shape there, pull it up from the top there. This is that easy way to confirm the highest point, I mean the midpoint between the two. Pull it to the one that's at the bottom there, the lowest one in this case, and there's your 50%, right there in the middle of the shape. That's your 50%. That's where you can enter for free, understand? So you can have your pending orders there, 16162. Let's put a buy stop there, 162. So that will be the next best possible area to enter again. The reason this is, in fact, I lost money trying to show this video, but anyway, that's not a deal, because I know we're gonna have the correct movement by the day ends and we're gonna recover all that. But anyway, so now you guys can see that's how you trade these things. You need to know if something is a retest or it's just an unscheduled fundamental, and if it is an unscheduled fundamental, stay away. And if you're ever gonna enter at the 50% level between the two opposing candles that were just spiking, which one in this case was the opening one and the one that followed immediately. Cheers guys, I hope this helps. Till the next one.